Good morning, Quasar Markets Live. We've got a good one today. I know the markets are getting beaten up a little bit, Buff, but you've got some good stocks for us over there. Everybody likes. Buff is with Kingsview Wealth, and I'm going to give it to Buff. He's got some charts today to show us, and I'm going to turn it over to you, Buff. How are you, man?
Hey, doing real well, Steven.
All right, here we go, Buff. I'm going to get out of your head.
All right, well, welcome to Quasar Volume Analysis Weekly Market Update. And what we do here is we first review last week's data, and then we'll finish by previewing a couple of important earnings events this week. So last week we could characterize last week's market action as a broadening advance, but under lighter supply. And so let's get right into the charts. Okay, this is our proprietary capital weighted volume. We have here a total volume, downside volume, and upside volume in green. And last week we had a shortened week. It was the President's Day holiday, so you would expect volume to be light on a 4-day week, and it certainly was. But let's look down here. You can see that this upside volume, despite it being a short week, was actually above average. So participation leaned fairly constructive last week. And if we were to look at these data points between the red, the blue, which is total, the red, which is down, and the green, which is upside, 68% of the volume last week was to the upside. So that's a very positive development. For the last 3 weeks, we have occurred these downside 90% days. And when these things occur in clusters, it becomes concerning. But last week we broke that with this. See just a little bitty volume here on Wednesday, to the downside, but well above upside volume to the upside, and so on altogether, 95% of last Wednesday's volume was to the upside. So we broke that string of clustering of big downside days. Friday ended up pretty good too, but we did have more downside volume accompanying, and it was about 85%, so just shy of our 90% bogey, but nonetheless it was a good day. The downside on Wednesday, though, look at the volume on Wednesday. It was actually below average. So although we had a nice cluster of upside volume, the volume was light on the day. So that brings that thing into question. As we look at and review last week, what happened as far as our different troops movements. Okay, the tariff headlines dominated much of the week's narrative, and it fueled the generals to finally resume. The generals are the QQQs, and it gave them the fuel to reestablish a little bit of a leadership last week. But they've been on a hiatus for some time now. So the Qs advanced 1.4%. Their lieutenants, the S&P or Spider, which are the cap-weighted S&P, up 1.3. The more broader ranks, the S&P equal weight was up 0.6, and the Russell 2000, our troops, were up 0.63. And what has been the stellar group of 2026, these brass commanders, or Schwab's dividend index, actually finished flat on the week. So it paused after a very nice surge earlier in January and February. And if we get a little bit more, so this is just broad, if we starting to white out, let's take a look here at the developed market index. Oops, hold on. Let me get the. Didn't expect that to happen. Let's just go. Well, if we were to look at the broader markets, we'll just skip these. The international markets were flat, and the emerging markets would have led all groups. They were up 2%. So those widening out, going international, particularly emerging markets, has been a fairly good theme for the year, and it's certainly playing itself out. So if now let's take a look at the overall trends of capital weighted volume. And one of the things we've been discussing here is that we've been seeing lower highs in dollar and capital weighted volume, but we've been maintaining the lows. And last week it was critical for us to bounce up a little bit because we hit this support level, and it was very important for the bulls to hold this support level, and it did, and it's starting to curl up. This is capital weighted dollar volume, and if we were just look at just regular volume, get that up for you. Looks very similar. Lower lows, higher high here, but it's been a pattern of lower lows and lower highs and maintaining this lower low. And so again, last week, capital weighted volume, the trend of it actually curled up a little bit. But both of these, what they need to do is they both need to bust through to make some higher highs, not only maintaining those higher lows. Now we'll take a look here, and let's move to the advanced decline line. And for 3 consecutive weeks, the advanced decline line has been making new all-time highs. So market breadth has continued this steady climb higher. Okay, so what we're seeing here is persistent expansion, and that participation remains consistent with our first quarter of 2026 broadening theme. Again, the broadening theme is that we're moving from this narrow leadership of these Mag 7 stocks, or what I like to call them the Nephilim, which have been driving the Qs, which have been leading the market, and we're broadening out, narrowing it to from just the S&P, the lieutenants, to the equal weights. Okay, so the market's moving just from that small narrow group of leadership, and that money spreading around into the rest of the S&P, and it's also moving down into mid caps, down into small caps, down even into the micro caps, and then it's spreading out to international and into the emerging markets. So capital appears to be reallocating rather than just retreating. So the gains have been spreading way beyond this narrow leadership. So let's take a look at that narrow leadership here with the Qs. Okay, the thing that we need to look at with the Qs is back in early December, there was this spinning top formation. Okay, and they've been struggling ever since. Spinning tops don't always have to be tops. They often can be consolidation patterns, especially when formed away from the all-time highs. So this spinning top here occurred weeks after the original highs. So generally when we see that, a spinning top within later than someplace other than the very top, it also often turns into a consolidation pattern. Okay, so the generals, if you notice here, all the highs have been lower, 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 lower. All the lows have been lower, 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 lower. So we've been seeing this pattern of lower highs and lower lows. That's a downtrend. Okay, last week we closed on the upper end of the range, but it didn't create a higher high, nor did it create a, um, a lower high. So we're still in that downtrend. But if we could break up, either create a lower high or a higher high, we can break that downtrend. So that is something that we'll need to keep an eye on, because as you can see by my support line here, we're right on. We closed last week. Last week's low was right on support. Now let's move from the generals to the smaller troops, which is the Russell 2000. Okay, and so the Russell 2000 has been consolidating since. Let me just show you here. Since this doji pattern, so we got this doji, and it's been consolidating ever since, going more sideways as opposed to up. So we're still in this doji pause, consolidating gains rather than extending them. But overall, it's still a bullish pattern. It's just been consolidating some gains. And so now let's take a look at some things that have been gaining some more recent momentum. This is the S&P, but it's the S&P equal weight. You can see that it continues to make higher lows, and tested the high. Last week's range actually was all the way. It was completely engulfed by the prior week's range, and so now if we were to look at those levels, which are were these last week's levels, the high would act as resistance at 205, and its low at 200 is acting as support. Now let's look at the standout of the year, which is dividend stocks. This is the Schwab U.S. Dividend Index. And notice here that it's built this really beautiful base. Love these big, fat, long bases. And it certainly developed a very nice base. And here it broke into a new high. And then it was followed through by these big bars. So breaking out on a big base is a very strong formation. But notice last week it didn't go up or down, but it did have a little bit of a wider wick. This gives the look similar to what happened with the troops. That is, this is a dragonfly doji, which generally means it's time to take a pause and rest. So that was last week. Let's take a look at this week, and what on the earnings docket is the largest of the generals, the biggest Nephilim of the group, the one that's been driving the Qs higher and leading the charge is NVDA. And so this is going to be a pivotal week for the market, a market with the earning report on NVIDIA. It's the leading component with the Nephilim, and while the broad markets during this period of time have been advancing, notice here that NVIDIA went down and now is just consolidating sideways. And so what we want to know here is what's going to happen when the earnings report. Will we see NVIDIA finally start to regain legs, or will it continue in this sideways trend, or will it go down? And so one of the revealing things that we've been looking at that has been a real canary in the coal mine, a real good leading edge, is looking between what's been happening with momentum, but not just price momentum, but volume momentum. And so what we're specifically looking at is the delta between how much momentum we have in price versus how much momentum we have with with volume. And you can see what on a trend basis, the VPCI, the volume price confirmation indicator, which measures the difference between a price trend and a volume trend, has been pretty much flatlining here. So that's not giving us much indication. It is below zero, which is not positive, but the main thing we want to look at is flattening out. Here we're looking at relative price strength, and that's scoring near 60, but the volume momentum is down here below 50, and so that brings us some pause here on our hopes for NVIDIA. But the nice thing is, look at although the volume momentum is negative, I mean below the zero line, which is 50, it is moving up. So that is the silver lining in NVIDIA right now, is that the volume momentum has been increasing going into the earnings report. Most of these other things are either neutral or negative, but this is one thing that does look fairly positive. So the battlefield may receive some clearer marching orders after that report, and we'll be specifically watching what is happening with these two indicators as we move closer to that report. Some other stocks, important stocks that are reporting earnings later on tonight. OKE10K, which is an important midstream stock. Again, another stock with just a beautiful base breaking out. The volume momentum is leading price momentum, which is very good. So this is very positive for a continuation of OKE. The negative here is what's happening with the trend. Although momentum has been gaining strength on volume, the trend has actually been weakening. So you can see here that it popped up here very nicely, but it's now crossed the zero line and is headed down. So the volume price confirmation has been nosediving, but the momentum looks good. So again, some indicators that are diverging from one another. Okay, key insight. Again, here we have the RSI here close to 70, the volume momentum below 60. So that's a negative divergence. Good breakout, but may need a pause here according to those indicators. Another big one Wednesday, I believe, is Home Depot. Home Depot is another one that's given up a lot of its gains. Is trying to rally back now, but has recently lost some of its upward surge. It's definitely running into some resistance in this area right here. Okay, but if we look at Home Depot, its RSI is really close to, actually is at support at 50, and its VMI is the volume momentum is all the way up here closer to 67. So this is again a bullish divergence for volume, and suggesting some positive action. And then we'll finish here. BMRN. Okay. Both of these are, it says basically these are at equilibrium, both for its volume and its relative price strength are right around the same levels, 70. It is making new highs here. The VPCI is moving higher, but it's so this this one would suggest a little bit of a caution, having this big move up and volume not leading it higher. I'd be a little bit concerned about this particular position, but not overly so. So overall, if we look at how our campaign is moving, it remains constructive. but yet it's incomplete. The breadth continues to expand out. The leadership is rotating, rolling over, but the upside participation is lagging. So lighter volume during advances really means unresolved leadership, and more restraint and looks more like consolidation. So investors should consider remaining aligned with the broadening strength. They should respect the near-term support levels. Try to avoid overextending into the heavy momentum until the volume confirms it. So in markets defined by rotation and selected advances, discipline, diversification remain your strongest defense. So that's the report for this week. Big Beat, you got anything for me?
Buff, it's very interesting that you've really laid it all out for us at Kingsview. And one of the things that I think that is interesting is the volatility has been a little, the volume hasn't been crazy, but the volatility has. Separate that for us a little bit and kind of explain to us your thought process going into, say, obviously NVIDIA's got their earnings coming up, but we've also got the Fed, we've got the president, we've got the State of the Union tonight. Is volatility going to pick up? Volume going to pick up? What's going to happen here in this coming week?
You would expect that the volume would pick up given all these headlines. However, like when we had the Fed announcement, you would expect volume would have picked up then. It really didn't. So the expectation, is that maybe we're getting into this point where where the market needs to make a move. You certainly saw that with those volume charts. We caught support last week, but if we break that support, it could get ugly. And last week we did those show finally some signs of some money flowing in, more money flowing in than flowing out. That's the first time that's happened in a little while, but it was on low volume, so low conviction. So so the markets are certainly seeing some volatility. Volatility has is definitely a sentiment piece, and volume is really also a sentiment piece because it tells you how many people are participating. I think the big piece of the market here is seeing how all this works out within the coming week, watching those support lines, making sure if they hold or if they continue to bounce. The other big thing to look at is looking at outside of that S&P. Okay, NVIDIA coming up is going to be a big leader, but the market, even though the volume hasn't been as positive, we'll go back and look at this advanced decline line. That advanced decline line is telling us that the money is rotating from those narrow leadership within the S&P, the Mag 7, and moving out to the rest of the market. But a lot of these signs, even within we looked at the equal weight, we looked at the dividend stocks, we looked at the Russell, and what did they all say? They're all saying pause.
Pause. They're all saying pause. All right, Buff, that's it. That's the point. They're all saying pause. Kingsview Wealth Partner, my man. All right, we'll see you right back here next Monday.
All right. Thanks, Stephen.